And so this thing is just resilient, it's anti-fragile, and it continues to just do what it was designed to do.
Вона собі шоколадку купила, гадіна. З'їла сама шоколадку. А я що робить? А що, мені дивиться, як вона їсть шоколад, я теж, може, хочу шоколад, блін. Задумала, блін, мені дуже шоколад. Мені дуже шоколад. Я дуже хочу шоколад.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day. Hope you're having a wonderful start to your new year. Now, having a look at the Bitcoin chart, the yearly chart right here, you can see that we did, in fact, close a nice green candle for 2023. And obviously evaluating this with the exception of this first year that Bitcoin, kind of came out in price discovery. If we have a look here, you'll notice the pattern. It does tend to go 3 green, 1 red, 3 green, 1 red, 3 green, 1 red. And now we are on the second year of green. So if history was to repeat itself, then this would suggest that we should have 2 very awesome years ahead of us. However, there's obviously a lot of this FUD recently saying that history doesn't have to repeat. There's been so much noise about the recent ETF, right? And also the fact that, in the beginning of the week, there was that crash, by the way, the crash that we had. As you guys could see right here over on LeveX, Bitcoin went from around 44,900 down to about 40,000, instantly got bought back up, and currently we're still within the same range. So people were reaching out to me on Twitter saying, hey, you got to do an update. What's going on? Guys, nothing's going on. This is just typical Bitcoin price action. Every time Bitcoin, dumps 5 to 10%, it doesn't mean it's the end of the world, right? We've spoke about the fact that we are possibly potentially due for a potential correction at some point, but even 20, 30, 40% corrections have never been anything to really shake the, diamond hands out from the Bitcoin space. Now, speaking of all of the recent noise regarding the Bitcoin ETF, you have some people saying imminently it's going to be approved. Monday, we're going to have this, major announcement. And then you have these other fudders coming out saying that, they're going to reject it. It's going to be devastating. Guys, today we're going to just literally forget all the noise, forget all the BS. We are going to cut straight to the point. And, I almost feel exhausted saying this, which is why I really haven't made a lot of updates because I feel like I'm repeating a lot of the same things again. But if you do need that reassurance, I highly suggest you stick around to the end of this video because we are going to get straight to the meat and potatoes because right now there's something that the traditional finance space is not quite able to comprehend, right? We haven't had Bitcoin for that long. It's only been something that's been around for about 15 years. So a lot of these guys that have been in the markets, these older fellows and ladies, they're in their 50s and 60s, whatever, they have this very traditional view on Bitcoin. But I want to break through that right now and explain why we can't really go off of what has happened because there's a big change right now and the new commodity is not what it's always been. And I'm going to break that down today and explain how we have a paradigm shift that the world has never seen before. Now, I know that sounds really crazy to start this video out. Where are you going with this one, K-Dub? Trust me, it's all going to make sense by the end of this video. And again, you have guys like Jamie Dimon coming out saying we should ban Bitcoin, but as we've showed you in the past, right, he said he was going to fire any of his employees that were buying it or trading it. And then in the background, what are they doing? They're setting up a trading desk, right? So we need to watch what they do, not what they say. And trust me, a lot of what they're saying right now is not what they're doing, right? And I also do, of course, want to talk about one potentially scary possibility, right? There is a little bit of a rumor circulating right now. I'll let you know my opinion on that. I have a very strong opinion on that. So we are going to get into that. But, having a look right here, the other thing to point out is if you do want to just take it from a traditional perspective, we still haven't broke the recent high on the S&P 500 index. You can see right here, there is a little bit of hesitancy. So you could say that maybe some of these traditional bros are out there just saying, hey, we're waiting to see if we break this high to go full on back risk assets. But what I can show you is that right here at the 102, this was a very significant level. We attempted to make this bounce off of this downwards trend on the DXY, which is the dollar index. And as you guys can see right here, we have this rejection at this area. If we do fall back into this parallel channel, it is in fact going to open up the floodgates, especially for things like risk assets and Bitcoin. So we're going to go over all that today. Lots of things to cover. If that sounds good to you, you know what to do. If you're not subscribed, subscribe, definitely consider it. And of course, friendly reminder, if you guys are looking for an exchange to trade on that doesn't have KYC and has 0 withdrawal limits, you can check out LeveX. That's the exchange that I have actually been using recently. They have very, very good liquidity. And if you guys do want to sign up, you can use the link below. You make sure that it says Crypto Zombie. You guys will get 10% off fees literally for life, forever, cash back. And of course, they will match the first 500 trades up to $5,000, and they'll give you a free trade. So basically, if you lose the money, doesn't matter because it wasn't your money anyway. If you do make profits, they will let you keep it. So check that link below in the description if you are interested. So let's start with the obvious. Let's start with the big news from Matrixport. So you probably already heard about this, but I have a lot to say about this. Matrix, they put out this thing, right? On target projections, they're saying that in January, they are expecting an ETF rejection for Bitcoin spot ETFs by the SEC, cautioning traders to hedge long exposure with SEC Chair Gensler's skepticism towards crypto, with a potential 20% Bitcoin price drop being anticipated. So they're saying that they think that the ETF will be rejected. Now, I'm not saying that's not a possibility. Remember that right now what we're waiting on is ARK, and we all know that BlackRock, they're the big guys that everyone's waiting for. But the reality is that if you just want to put it into perspective, before we even get any farther into the video, let's just call it out as it is. The SEC has been consistently losing battles, literally one after one, taking L's in court. The judges are basically saying that you do not have this real means to keep rejecting the ETFs. All of these guys, they've come in, they've made the necessary changes, and remember that once a judge says that you cannot reject on this basis, that's it, it's done. So unless they're going to keep coming up with these new reasons to reject or delay, it seems like they are in fact having their backs pushed against the wall. Now, it doesn't mean they couldn't pull something out of left field, right? Of course, some people are saying it had something to do with Jim Cramer's comments.
And obviously it had a great year last year.
Yeah, we got that clearing event of Sam Bankman-Fried going down, and that seemed to make people feel, you know what, we're safe. And then the ETF.
We continue to wait
endless
for the
ETF.
Right.
And yeah, look, it's very rare that I've ever seen that this way. Could it be a waiting for Godot? I mean, no, there won't be an ETF. But I do think that the people who are in it for that are going to use that as a chance to sell. But this thing is, you can't kill it.
No. Can't.
And the late Charlie Munger, who was so brilliant on so many things, was blind to this. Now you can say, wait a second, maybe it's all going to come
Jamie
unravel.
Dimon has not spared any negative words.
No, but look, I mean, it's a reality and it's a technological marvel, and I think people have to start recognizing that it's here to stay. The SEC's been against it almost the whole time.
Yeah.
Now, that doesn't mean that every one of these is here to stay, but I do think that this is a remarkable comeback that was unexpected, except for all the bulls who turned out to be right.
Gensler does a lot of jawboning.
Didn't work.
He is quite the counter indicator, right? I mean, it was actually kind of funny how that video came out, and you think it's a meme, you think it's not going to play out, he says it, and price dips. But what I find most interesting is that just 2 days before Matrixport put that out, they said that they're anticipating a substantial Bitcoin surge to $50,000 in January, driven by an imminent Bitcoin spot ETF approval, institutional buying, and factors such as supply shortage and historical trends, with potential for an altcoin season and a funding rate reaching 66%. Now, this is very, very interesting because obviously this was reported by The Block, right? Now, just to put that in perspective, I want to point out that The Block was sold to Foresight Ventures in a deal worth $70 million in November of 2023. Guess where Foresight Ventures is also invested? Right, it's in Matrixport. So again, what is this all culminating? It's basically saying that you have to weed out the noise. The whole objective is obviously to FUD. It's to confuse. It's to make you sell. It's to make you worried, right? And I've seen these, videos coming out lately where they're like, oh, it's the accumulation phase. It happened too fast. We don't have enough gas. But again, what people are not understanding is you're basing this on previous cycles when we didn't have institutions, we didn't have the green light, we didn't have the semi-regulatory clarity, whatever it is that you want to call it. And as you can see right here, Andrew points out that BlackRock is the first to finalize its full application for spot Bitcoin ETF. Oh, and get this, guys, JP Morgan has been named as the approved participant in updated S1 filings just moments ago. But I thought that Jamie Dimon was the guy that says Bitcoin should be banned, and if he was the government, he would ban it, right? Again, watch what they do, not what they say. Jamie Dimon says Bitcoin should be banned. Now his bank, JP Morgan, has been named as an authorized participant on the BlackRock ETF application, the biggest name in the fund's management. And not to mention the fact that just 2 days ago, the SEC has been holding meetings with major exchanges, including the New York Stock Exchange, NASDAQ, Chicago Board Options Exchange, regarding Bitcoin spot ETFs. So why would they be having all of these meetings if they weren't looking to make moves, if they were just going to reject it, which again, they may, I don't know what the basis of the rejection of ARK would actually be at this point. Anything is possible at this point. I don't rule anything out, but ultimately, why would they be having these meetings? Watch what they do, not what they say. I think that's going to be the theme of today's video. That I should probably put that in the title, but you'll kind of figure that out as we go. And coming over here, Anthony Scaramucci puts out this cryptic tweet, just comes out yesterday. It's done. Now, he didn't elaborate on this. Why is he saying it's done? What does this mean exactly? Well, I was interesting. Tommy Mustache pointed out right here, BlackRock has a 99% win rate. They've only ever had one ETF that was rejected out of 576. So what is he referring to as it's done? We know he's a Bitcoin bull. We know he's a proponent of cryptocurrency, but maybe he can't speak much more on it, right? So if we come over here, and we have a look, you guys may have seen this, but I wanted to break this video down. Even if you have seen this video with Anthony Pompliano on CNBC, it really, really breaks down what traditional finance is not quite understanding about the paradigm shift, okay? Everyone's used to the traditional commodities. We have, things like gold and silver and, whatever. You can literally name anything. Anything's a commodity, right? This pen is technically a commodity. I mean, if you really want to break it down. But what they're not understanding is the largest paradigm shift that has ever happened. And if these guys don't wake up to the change that's going on right now, they are going to get left in the dust.
One thing I always say to people is, what is the most valuable commodity in the world? In my opinion, is computing power. Bitcoin is the strongest computer network in the world. And so when you're buying Bitcoin, you're buying an asset that is backed by the strongest commodity in the world. So when you start to think of it from that perspective, yes, it is internet native. Yes, it is for this kind of digital generation. But those people don't look at oil or gold or anything else as the most valuable commodity. They look at computing power. And that's why Bitcoin is so attractive to them.
Another thing that a lot of people aren't even realizing is it's not just the Bitcoin ETFs themselves. It's these other funds that are also changing their perspective, right? Don't forget, they're allowed to include whatever they want in their baskets, up to, theoretically as much as they want. But Anthony Pompliano, he kind of breaks this down again, where you can also have these alternative sources of investments and capital that doesn't even have to be directly through BlackRock itself.
I do think over a long period of time, Bitcoin's price is going to continue to go up. We're going to have a persistent bid from all these ETFs. Another thing people aren't talking about, everyone's talking about the primary fund flows. So retail or institutions buying this ETF. But actually what we're starting to see now is other publicly listed funds or ETFs are changing their prospectus to say that they can put up to 15% of their AUM in the Bitcoin ETF. So if you have the best performing asset and you got an ETF that's lagging, why would you not put Bitcoin in your ETF?
And again, yes, somebody working on Wall Street, could they open a Coinbase account? Could they gain access to Bitcoin? Could they self-custody? Of course they could. But the reality is most people are not going to want to do that. We talked about the 15-second phone call, right? That's what they want to do. Hey, Bob, just heard the ETF is launching. I'd like to get an allocation. Yeah, I'll take 1%. You know what? Let's go for 2%. Cool. Thanks, Bob. Later. Click. That's how easy it's going to be. And the reality is regardless of what all these people are telling you, the majority of these big funds, especially the ones that are trading, or not trading, but holding the assets on behalf of their clients, they literally do not have the ability at the current moment to gain that access.
That's a very simple question. If I own Bitcoin through an ETF, do I have greater protection of my ownership of that Bitcoin interest than I did through some of the exchanges where I've heard some nasty stories?
So you definitely have the exposure, and obviously it's a regulated entity. You have the ETF structure, all the things that I think Wall Street really enjoys about the protections of those regulated funds. What you don't have, though, is direct exposure and ownership of Bitcoin itself. So one of the beauties of Bitcoin is similar to cash. You can go to the ATM, you can take the cash out of the machine. With Bitcoin, you can actually take self-custody. You can own it. You don't have to rely on any counterparty. You don't have to rely on an exchange. You don't have to rely on an ETF provider, etc. And so people have to ask themselves, what is my comfort level? Am I comfortable taking self-custody, or do I just want the financial exposure and I don't want to deal with that? And I think that that's where you're going to see a lot of people who've been sitting on the sidelines. Institutions, they can't take self-custody. They need the ETF to be able to actually allocate to the asset.
So before we move on to what might happen if the ETF is rejected, because that is a possibility that everybody's still talking about, I wanted to break down this tweet from Caitlin Cook. Now, this is a little bit long, so, sit down, get relaxed, put on your headphones for this one, but I want you to listen to what she says. I think this is very important, and I think she nails it on the head. Here we go, guys. So she goes on, she says, as someone who used to spend all day, every day selling ETFs and other financial products to traditional money managers of all shapes and sizes, I can promise you one thing. Even if bullish, most of you are drastically underestimating the long-run impact of crypto ETF approvals. Maybe it's obvious, but just in case it's not, allow me to get your wheels turning. So chew on this. The registered investment advisory industry, to be clear, this does not even include asset managers by massive broker-dealer firms. A lion's share of the asset managed by hybrid BDRIA firms across the country grew by 2.1% in 2022, with 15,000 plus fiduciary investment advisors managing, here you go, 114.1 trillion in assets for 61.9 million clients. Now, imagine even just a fraction of a percentage of those assets going into a spot crypto ETF, a product that fits within the confines of their current framework. Let me be clear. It will not happen all at once, and they won't ape all in, with their assets, nor should they, or anyone for that matter, LOL. But it will undeniably open the floodgates to a huge new opportunity set or assets and participants. Realistically, as it stands today, whether you like or agree with it or not, most people in the world want a very modest allocation to crypto for the possible upside potential it has. They just want exposure to price action. It will make up a small piece of their overall pie and perceived as one of the riskiest and most volatile parts of their portfolio, because relative to the rest of the investment landscape, it undoubtedly is. Now, obviously, us in crypto, we're looking at things like Bitcoin saying this isn't volatile. Bitcoin's been hanging around this range for how long? Well, if you look at traditional investments, it is. So let's continue. If you're working in or heavily involved in crypto, it's probably warped your brain to an extent. I know I have. My perception of risk and expected returns have become disgustingly skewed versus the majority of the population. But let's think outside of our echo chamber where most of the population exists. Most of these people don't want self-custody. They don't want to actively move funds at any time of the day. They don't want to learn how to transact on chain or do anything fancy. They don't want to set it, forget it. And they do. I'm sorry. Getting ahead of myself here, guys. They do want to set it and forget it and hope the value of their money goes up and over to the right over time. Ideally, this will change. I do dream of a day when blockchain-based solutions are adopted by the masses, but let's focus on the now. While it probably seems boring to many of you participants that the ETFs will bring meaningful amounts, but not just because of the money inflow. You have mature, vibrant markets that boast a different array of participants that engage in different ways. This is just the start. So here we go. Welcome this with open arms. We should welcome traditional adoptions of what's being built, even if executed in a way we deem as suboptimal. Trust me, I get it. Spot ETFs are like putting training wheels on a Ferrari because it means that people are paying attention and getting skin in the game. And when you have skin in the game, you are far more incentivized to learn. And to that I say, let's effing go. So again, the idea that we can even use the technical analysis at this point, it's something that we've never seen. Do you guys understand that, yes, we've had institutional interest here and there. Yes, of course, some of Wall Street is in. Yes, of course, some of these traditional finance guys get it. And yes, of course, we do have things, like Tesla, they had bought some. We obviously have Michael Saylor and friends and all these billionaires, Paul Tudor Jones. But for the majority of them, they still don't feel comfortable. And some of them don't even have the legitimate legal access to do it regardless of how they feel. Now, when you consider the 15% you could put into these other ETFs, even just 0.5% of taking the total, let's just take BlackRock, for example. We don't even need to go into the total global money supply because that's ridiculous. If we go there, forget about it. Bitcoin's going to like 10 million, and that's crazy. It's not crazy, but we only have 40,000. Let's keep it realistic here. When you just look at a small percentage of just that 13 trillion, under management, even just for BlackRock, let's say, you're talking about massive, massive amounts of capital. So again, I'm tired of saying it. I feel like I'm a broken record over here, and yeah, it is. It's not really like my job necessarily to keep pumping the hopium, because that's not what I want to do. I mean, you guys can see I'm wearing the shirt, I'm wearing the hat. You guys know where I stand. I've been in this market for, basically almost 8 years at this point. And I can tell you that there's nothing that anyone can do to stop this. Every bit of FUD that I've ever seen, they're going to ban it. China's getting rid of it, and mining, and, the SEC and all this other stuff. And Bitcoin is used for criminals and the anti-crypto army. Every single thing that they have ever tried to do has never, ever been able to kill it. And if you believe in the Lindy effect, if something has existed for a certain amount of time, then it should theoretically exist for the same amount of time. So minimally speaking, Bitcoin should at least have another 15 years in its run if you do think it is just a Ponzi and a greater fool theory, because at that point, we've already had it for 15 years. It's not a fad. Bitcoin has outlived a decade. But I hear you. What happens if we do have the Bitcoin rejection? Well, I'm actually going to turn it back to Pompliano because he broke it down pretty simply.
Hey, Anthony, the CoinDesk, The Block, a lot of different places are reporting on this Matrix Port report from an analyst who says that the SEC is going to say, forget it, they're going to reject the ETF, the spot Bitcoin ETF proposal. I know you think that's a real long shot. What would happen if they actually did do that, if the SEC said no?
If they approve it, I think that there will be a lot of short-term volatility, and then we'll kind of get right back on track, whether it goes up or down after the approval. If they reject it, I think the same thing would happen. There would be a lot of kind of short-term volatility, and we'd get right back on track. The beauty is with Bitcoin, if we go back, we saw something like this. China had over 60% of all mining inside of their borders. They completely banned mining and kicked them all out. 50% of the hash rate went offline. By the end of that year, May of 2021 is when it happened. By the end of 2021, mining hash rate was back to an all-time high. And so this thing is just resilient, it's anti-fragile, and it continues to just do what it was designed to do.
But that's true, although the risk reward, the returns based per unit of volatility you cite, it really depends on the starting point. Right? I mean, 2.5 years ago, you were here, you were saying $100,000 really soon we're going to get there on Bitcoin. And it's been nothing through this inflationary spike and a Fed tightening cycle.
I always say, look, at $8,000, right? I thought I was going to 100. It only went to 70. I was off by a little bit, right? But in terms of, I think these directional moves, again, it goes back to there is a lot of volatility here. Yeah. And I do think that the volatility will dampen as obviously ETFs and kind of more persistent, sticky holders come into the market. But remember, we aren't just talking about an ETF either. We also have the halving that's coming up at the beginning of Q2, and we've got to return back to loose monetary policy. And so I think that we're going to see a pretty significant move in Bitcoin. Just don't expect it to go from 45,000 to 1 million tomorrow.
Right.
So here's the one thing that is a little bit scary, and we have touched on this a little bit on the channel. Now, Max Kaiser, who you guys know is probably one of the biggest Bitcoin maxis really ever. In fact, I've actually met him in person. We've talked. He used to follow me. He unfollowed me because I guess I made a comment about how I'm not a Bitcoin maxi, but I'm as close that it gets, and I guess he was offended by that. I don't really know. At the end of the day, look, guys, there are other opportunities. I mean, I've made it very clear on this channel that I do trade and I do buy altcoins, but ultimately my goal is to maximize my Bitcoin holding. I don't know why that's such a polarizing view. I'm sorry if people don't like that, but it's true. And I'm not going to lie to you guys. I do trade altcoins, but I do it to get more Bitcoin. But anyway, getting back to what he said, I digress. He says, a delay in the Bitcoin ETF listing connected to coordination with possible anti-self-custody laws. Now, before we get into the TA, which there really isn't much TA to go over because we've been in the same range now literally for weeks. But what I will say is that if the United States federal government does come out and say something where, it's going to be illegal for you to self-custody your Bitcoin, well, then I will have to say that I will have to take a very strong stance against that because I think it's extremely anti-constitutional. And also, not to mention the fact that if you are in the United States, let's not forget that there are 50 states here, all right? So you could actually say that the United States is semi-decentralized, right? Just to give you an idea here, basically, Obviously, on a federal level, we have, marijuana, right, which is technically illegal, right, on a federal level. But in the state of New York, where I'm originally from, it is legal, right? So that's weird. It's federally illegal, but it's legal in the state. How does that work? Well, it's because the states have the power to make that decision. And hence, as you guys can see, I've currently relocated to Florida. And the reason for that is because Florida is extremely crypto friendly. In fact, there's actually a chance that I may be meeting with Ron DeSantis at some point. Yeah, I'm not kidding. And if I do that, I will definitely upload the video. I'll let you guys know how that goes. But yeah, I mean, down here, they're anti-CBDCs. They're anti, this crazy government surveillance, and they are definitely for your self-custody. So if they do try to come out and say, Bitcoin is illegal if you hold it, I would push back on that. I would say that goes against your American freedoms, and I will fight for that. I will fight for that for everybody, for myself, for you, and for everyone, because I believe it should be your right. And also, if Bitcoin is a commodity, how can you tell me that I can't hold a commodity? That's like telling me that I'm a farmer, right? And I have like cattle or something like that. Like, those are commodities, right? So I have the right. So either change the definition or, figure out what you're doing, because some of these just don't add up. Anyway, long story short, that is that. Let's dive in. Let's have a look super quick at the charts. Again, I don't have much to say about these charts because, as you guys can see, we are continuing to put in higher highs and higher lows. And even this, look at this dip right here. This is the dip that everyone was freaking out about. Oh my goodness, a 10% Bitcoin dip. We're all gonna die, guys. We're all gonna die. No, Bitcoin is still trending higher. It's still putting in higher highs. It's still putting in higher lows. We had amazing support right here with the 21 exponential. We've also, if we switch this, by the way, to the weekly, you can see that we're heading for a golden cross right here on the 50 over the 200. And we've also had, and it's not really a golden cross if the 21 exponential is not really that important on the weekly, but ultimately you can see the money flow, is coming in. And you can see that we did have almost a perfect retest on this upwards trend, right? Look at all these right here, and then look at where we came down and we wicked. So again, guys, the trend is your friend until the end, and literally the trend has been going up for the past year. All these people calling for $10,000 Bitcoin. I have to stop doing the TA for a second. Can you imagine listening to these people? Can you imagine listening to these bears for the past year, sitting in cash while you watch Bitcoin skyrocket 150% in the year? Guys, the trend is your friend until the end. The trend is up right now. If the trend breaks, I'll let you know. But the trend hasn't broken yet. So there's absolutely no reason for panic, right? Moving back on over here, you could see that the one thing that does concern me is we are in a little bit of overheated territory. We have not had a proper retest at any of these lower areas. Now, who knows? Maybe we don't have to, right? I mean, when you start to go parabolic, like right here, you don't get those proper retests. Now, I do think we're a little too early to be going parabolic, but one thing I can tell you is if we just look historically at the Gaussian channel, once you enter this green, you tend to stay for this green for a very long time. Now, obviously, I get it. History doesn't repeat itself, yada, yada, yada. But again, this is based on, a very historic trend, and we have only just begun to enter this area. So, could we potentially dip all the way back down, to the bottom of this area right here? Of course, it's possible, but we are starting to put in something of a broadening, ascending wedge. And, that basically says that if anything, if we have this crazy crash, I would probably say that your best buying opportunity would be a 30% crash down to about $29,400 to about $30,000. And that's if you get that. So even if we do have the ETF rejection, that's probably your best purchase. But the thing is if you're sitting here waiting for a crash down to 30K, what the heck were you doing not buying when it was 15 or 20 or 25, right? That's the question. That's exactly why dollar cost averaging has always been such a great strategy. Right here, we have actually had, and again, I kind of wish that I do wish we crashed a little bit harder personally. I would have liked to have closed the CME futures gap, which still sits around 39,600. I still don't think that's out of the cards within the next, I don't know, a couple weeks to a month possibly, but you can see that we actually broke out of this downwards parallel channel and now it's acted as support. So you could see that not only did we have the support down here, but again, if we make this upward sloping trend right here, you could argue that we've had a downward sloping trend retest and we've had an upward sloping trend retest. So that's a resistance and a support, both acting as a support. So ultimately, again, the trend is continuing on this parabolic trend. Now, I personally do not think we're going parabolic. I'm not trying to be a bear. I do think at some point this trend is going to break, and I do think it's going to break before we get to the all-time high, but we still have the 0.618, which is sitting very comfortably at around 48,776. And remember, we had this falling wedge breakout, right? Whatever. I don't really know where you guys could put it here. You can put it there, whatever you want. And if you take the target right here and you move it over to where you had that breakout point, you know, of this right here, that kind of, I mean, that's crazy. Look at that. That puts us right in line with the 48K. So again, I think that 48,000, 47 to 48, you know, could it overshoot it, go to 52? Of course, that is the area where I would start becoming a little bit cautious for the Bitcoin price. It also coincides where you can see up here where we have the volume range profile falling off. But ultimately, I do believe, based on the fact that we have all of these, you know, you have the super guppy switching into the green, the RSI over 70 for 3 weeks, the MACD moving into the green territory, every single thing right now is pointing towards the fact that Bitcoin, regardless of the ETF, regardless of if it gets a rejection, regardless of what your financial advisor friend from traditional finance is telling you about the Ponzi scheme and the greater fool's theory, I've been hearing this, guys, for years. I've been listening to the same rhetoric for years, okay? And Bitcoin continues to prove everyone wrong and make everyone feel ridiculous, including guys like Jim Cramer and all these other guys. Now, will Peter Schiff ever come around? Probably not. I think he's not allowed to do that, right? He's the gold guy. But I think at the end of the day, we've proven that this is the new commodity. This is the new space. It is information. Bitcoin is something that we've never seen before. And like I showed you with the gold ETF that got approved, after it got approved, what happened? Oh, I think it was like, I don't remember the exact number. It's 300 plus 400% increase, okay? Except remember that when the gold ETF got approved, the gold market cap was substantially higher than what the Bitcoin market cap is right now. You don't need that much capital to move it. And again, I don't want to go into all the math again. If you guys watch, you know that market cap is a lie. If you need $1 billion to move to a certain level, whatever, you don't need $1 billion to come in. In fact, you only need about 25% of that, coupled with the fact that you have the halving, coupled with the fact that you have, you know, all this Bitcoin coming off of exchanges, you know, opening the floodgates to all these people that never had opportunities before. Yeah, I think that's where I'm going to end the video, because I think you can kind of fill in the blanks for yourself. So thank you again for coming back to the channel. You know, I know that I'm not making videos every single day. There's a lot of channels, they put out videos every single day. What do you guys want me to do? Keep repeating the same thing over and over again? You know how I feel. Until we start getting some crazy market volatility, we really haven't seen any outside of that 10%, you know, wick, which basically almost virtually got completely bought back up by the end of the week. Until we start seeing some major moves, right now I would be a little bit careful with the trading. But again, guys, if you do want to learn how to trade, make sure that you check out this tutorial popping up right here, right now. That's Apex. It's a decentralized exchange, you know, 60 cents per trade, roughly. You know, you keep your own keys. And if not, check out LeveX. And remember to check out that promotion in the description if you guys want to get that 10% and they will match your first trade. So guys, my name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. I love you. Hope you're having a great new year. And of course, peace out.